Nothing said on Lightspeed is a recommendation to buy or sell any investments or products. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hello, welcome back to another episode of Lightspeed. I'm your host, Jack Kubanek, joined today by the Mike Dudas, managing partner at Six Man Ventures, also someone you've probably seen around Twitter. Mike is a friend of the pod. I think it's your third time on, so thanks for once again coming on Lightspeed.
Thanks for having me. Super excited to chat today. Lots going on.
Yeah, we met I think a couple times, Mike, but the one I remember was at the last permissionless conference in Salt Lake City, Utah. Six Man held this informal watch party for Mets Phillies, and I think this was the game where Lindor hits a grand slam and wins that series. I remember you being quite excited, as I was too. So
indeed, I may have run around that lovely barbecue bar screaming and my head off. I always like to say it's the same thing with crypto. I like to say business in the front, party in the back. That was sort of the party in the back portion of permissionless for me.
Exactly. Yeah. So we can only hope that this podcast, gets to that level of excitement, but might not bank on it. But and Mike, you're gonna be back at this next permissionless in roughly a week, right?
Exactly. Excited for that one. So going to be in a panel with Hasib from Dragonfly, Kyle from Multicoin, Jordy from Selene. It's going to be a lot of fun. My goal is just to get a couple words in edgewise. You've got some guys who talk really fast and really sharp there, but it's fun. And then after that, in the afternoon, doing a panel with a couple other folks, and Neil from Delphi and some others, hearing startup pitches. So I don't know I think it's going to be maybe a little Shark Tank like. So I'm looking forward to that.
Well, there's your obligatory permissionless plug. It's coming up in a week. Mike's going to be there. I'm going to be there. It's going to be a great conference in beautiful Brooklyn, New York. So get your tickets. Use Lightspeed 10 for 10% off at checkout. That's a gift from me to you. But with that, Mike, let's just dive into it. So you're a venture investor. We don't have a ton of VCs on this show for one reason or another. So maybe just to give people a bit of an intro. I know on various other podcasts you've talked about your whole story, but I was just thinking about Six Man this morning, and you guys were founded in 2021. So you've been through a couple of, and you're predominantly consumer focused. That's kind of what you talked about the last time you came on Lightspeed. So you've been through a couple hype cycles, narrative cycles in the consumer world. So I just wanted to ask for like your greatest hits, like in those couple of cycles you've been through. What are some of the investments that really shone through for you?
Absolutely. And so what's interesting is I think it often comes across that we're consumer investors, but what I would say is we're more like app layer investors, and that can be everything from consumer to business applications. So to my point earlier, business in the front, party in the back, we invest across the full spectrum of apps at Six Man Ventures, from pre-seed to Series A, and we've seen quite a lot, as you said, over just we're only 4 years old. I think we're fortunate enough to be one of the best performing sort of new vintage funds, and we're growing fast. And the reason we are is because we focus in an area where we think we have expertise, and frankly, where over the last year and a half we've seen a lot of growth, and that's apps that are focused on providing value to consumers, value to businesses, but also generating revenue. And we're seeing a swing lately, back to tokens and equity being valued in crypto companies and protocols that generate revenue. So I'll just give you a couple examples of some that have been hits for us. Obviously, Pump.Fun has been the largest hit from a revenue perspective, more than $750 million in revenue over the past 14 months, and is still doing $1.5 million in net revenue per day or so, and more than that in gross revenue, because they've been able to launch Pump Swap and start to expand their product suite quite a bit. We've also invested in Magic Eden, for example. And what's really been interesting about some of the 2021 crop companies is, when we invest in Magic Eden, it really was an NFT marketplace on Solana, the best product there to purchase NFTs. And what Magic Eden is today, and it's a testament to the great founders there, is it's really a cross-chain product, sort of a gateway app to buy anything across any chain, from liquid tokens to NFTs. They've done a really good job of diversifying their business over 3.5 years. On the kind of call it fun, token trading side, we've had a couple really successful and starting to break out stablecoin investments. So we're investors from both funds in squads, which is sort of I call it the safe of Solana, but really it's grown to be much more than that. That was the original thesis, and now it's really a full stack financial services company for consumers and businesses. Starting with treasury management, moving to wallets, and now getting into business banking, bank-like services. So really just a on-chain financial services company at this point. And then on the sort of pure business stablecoin side, we invest in a company called Dakota, which former Coinbase and Anchorage executives founded, and it solves the problem for a number of companies. You think pump-like folks who have tens to hundreds of millions of dollars, and basically it's really difficult to get banked at that scale, and with some of the crypto-style businesses. And so Dakota offers bank-like services and gives a bridge between sort of your on-chain activity and the fiat world where you have to pay a lot of your bills. So we've been fortunate to invest across a pretty good spectrum. One other area is DePIN that we've done some investments, and IO.net, a decentralized GPU marketplace that we invest in, has done really well and is growing rapidly. And again, that business works where some other DePIN-like businesses don't, because there's just a tremendous amount of demand for what they're selling, and they generate real revenue, and therefore the token has value.
Mm-hmm. So believer in the revenue meta before it was cool.
Yeah, exactly. And look, that's gonna be the story moving forward. Like, there's just only so long that people are going to value unused block space and DA layers in the billions of dollars.
I think it's one of the funniest crypto Twitter memes, because the revenue meta term, it's just perfectly it sounds like it could be serious. I'm convinced it's a bit. I don't think anyone is seriously saying that revenue is a meta, but there's been enough earnest this is ridiculous, I have to explain that revenue matters tweets that it's been. I
saw a good one. Yeah, so basically that's the funny one on sort of the protocol side, and then on the equity side, it's the we've gotten to the point where we've got a treasury company for every equity based treasury company for every niche asset in crypto at this point. And somebody posted yesterday, I think it was Peter from 1KX, it was just hey, why don't we get back to building USDC treasuries? I'll back that company, Yeah. So things have gotten a little bit wild. But I think it's a positive thing. I'd much rather, as an industry, we're focusing on, wow, Hyperliquid generating hundreds of millions, maybe over $1 billion on an annualized basis, and then actually not keeping that all themselves, but buy back, burn, and putting that value to work for token holders and protocol supporters.
One other question I had about venture is you did an episode of The Roll Up recently with Andy, and I was watching it before this, and you talk about there's been a real slowdown in terms of the velocity of venture deals, both in crypto and just in general tech, the past couple of years, and maybe fewer early stage deals going on. I'm curious to sort of broaden that conversation. Do you foresee a lot of crypto VCs just becoming liquid investors? Because I was talking to a VC the other day who was just kind of talking about a lot of my time is spent just scouting new liquid tokens to buy. We got in on Hyperliquid early, and that could return the fund based on where Hyperliquid is now. And it seems like there's a lot of opportunities at this point to just buy tokens instead of kind of doing the whole venture process. So is that, do you see that trend sort of continuing over time, or will there be a equilibrium reached once again?
So I just absolutely believe that if you're going to become, if you're going to be a top performing, call it early stage or venture style investor in crypto, unquestionably you're going to have a muscle that allows you not only to invest in private companies, pre-TGE, but you are going to have to, moving forward, start to be able to identify liquid tokens that are trading and either have venture upside while liquid, or maybe are in a distress scenario, and there could be an opportunity to work really closely with the protocol like you would with a private company and turn it around and add significant value. So our fund, Six Ventures, we hadn't done anything liquid until early 2023. And like the investor you mentioned with Hyperliquid, we were fortunate enough to buy a bunch of Solana early on. And so, I'm sorry, not early on. We were not seed investors or any of that in Solana, but able to buy on liquid markets when it was below $20. And so that's really served us well. And you become a liquid investor by mistake in some sense. And to your point, the returns have been really phenomenal for investors who did do that. And there are a number of them. And frankly, it's not just the returns, but it's how rapidly you can get liquidity, which really matters. So crypto LPs, so the folks who invest in crypto venture funds, tend to have a different profile than traditional venture. They're not as long-term oriented, and they actually want to see the capital they provide you returned much quicker than traditional VCs have to return them to traditional institutional LPs with really long-term time horizons. So I think you're solving a couple problems as a venture investor if you have a larger liquid book. So nearer term liquidity, optionality on the tokens. The other thing is the private markets have candidly gotten pretty hairy. So one, there's so much money, competing for a limited set of really good deals. The amount of capital that's needed by these founders to create protocols they're realizing is much smaller than during the ICO era or previous eras, and they're getting counsel to sort of like iterate and grow and not over raise too early on. So anyway, there's a lot of capital competing for early stage deals. That's leading to price pressure. And frankly, the private markets, particularly where there's tokens, are getting priced to levels that just don't make economic sense for venture investors, especially given the structural nature of private deals, which is that you typically will have a lockup. And those lockups can be anywhere from 1 to 4 years, and they can just sort of like push you out of a cycle. And you may not unlock until, like, candidly, in many cases, the meta may have moved on. And so, there's just kind of like this mismatch in the private market between what you're putting capital into and then kind of the value you're getting back and how long duration that value lasts for. Obviously, in a perfect world, protocols will be valuable for 10, 12, 15, 20, many, many years. But there's just a lot of cases, a lot of scenarios where that hasn't been the case. So anyway, what you're seeing is private investors like ourselves dabbling more and more in the liquid markets. And for our next fund, we're planning, and we're telling our prospective LPs, we're planning to invest quite a bit more liquid. And my hunch is that over the course of a 3 to 4 year deployment cycle as a venture fund, you're going to see multiple cycles. You're going to have opportunities to see value. And so we're scouting those out, and it becomes easier to scout those things out when you're not purely trading. Things aren't purely trading on mimetic value, but when there is like underlying net revenue, and there are ways to distribute that value to token holders. So you see a bunch of liquid only funds having success with that, and I think as they have more success, as they see their AUM grow, it will lead more folks to sort of copycat that strategy. Now, the one caveat I'd say is, I'm always saying sort of buyer beware if you're an LP and you're looking at funds and they're running both a private fund, like a VC fund, and then next to it, they have a hedge fund. There you can get into trouble as an investor because there may be adverse selection in terms of like what goes into which funds, or, hey, I've got this liquid fund that I'm going to help prop up my private book by maybe eventually you can do things to sort of mark up the prices of various things. So I think the best strategy, and the one we're planning to pursue, is to house all of our strategies within one fund, from private to liquid. And because we're a registered investment advisor, we have the ability to do that.
Soul lovers, grab your Ledger Flex Solana Edition now at the link in the show notes. The Ledger Flex Solana Edition is now accessible to anyone who holds SOL in their wallet. Any amount of SOL held on any wallet will do the trick. You'll also get a Magnet Folio, SBT, and $20 in Solana. This is your last chance to grab the custom Magnet Folio and SOL voucher, so don't miss out. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. And something you alluded to, and I know that you've kind of tweeted about many times, is there's in the token market, there's just a lot of I think like kind of empirical evidence of almost market manipulation happening, and you saw this with a lot of the movement, um, a lot of the movement labs scandal, and there's a number of other tokens that you look at that the whole market goes down and they go up on a certain day, or the token came out and now it's valued at many billions of dollars and has done nothing but go up despite having no real revenue or product live yet. And I guess I just want to ask about this broader trend where it's kind of peaked already at this point, but April and May, there was just a lot of interest in outing some of these scammier tokens and talking about the underbelly of what goes on with market makers. And I like, just in my reporting role, I was really astonished learning about all the deals that go on behind the scenes. Like uh, tokens are lucrative, I guess. And so the innovation flows where the money is. And so people are coming up with lots and lots of ways to kind of grease lots of collective palms in the process of launching a token. And sometimes the token is the whole product. The product is not the product. So looking at that general narrative, do you think that like there's going to be any change? Like has there been any benefit to where investable tokens are going to win and scams are not? Or is this just going to be a continuous problem for crypto based on how the incentives work in this industry?
So I think it's going to be a problem. Will continue to be a problem until assuming we're in a cycle, and at the end of the cycle is the next 12 to 18 months, it's going to continue to be a problem. And the reason is there are a bunch of these types of entities, companies, protocols that have been funded already, and they have cap tables, constructed of the people who tend to do the playbook that you're referring to, which is, hey, launch something at a really low float and a high FDV. And then, hey, I'm going to go OTC and sell my stake at a quote unquote big discount. But, that 50, 60% haircut is like just absolute found money, because, as you said, a lot of these things are trading at really high, likely manipulated levels. And the reason they're trading there is because, to your earlier point and assertion, there's incentives in place often with market makers where they have like options on tokens or sort of side deals. That means that they're actually not incentivized to do their core job, which is making both sides of a market, but maybe incentivized to go long and prop up the price so they can sell into it with options they have. And then again, like I said, there's scenarios where the team and or investors have the ability to do OTC deals at quote unquote discounts, but the discounts are to these overinflated, really high valuations. By the way, the exchanges have an incentive to have really significant trading volume and high valuations as well. I mean, they take percentage-based fees typically on total volume. So the higher the price and the overall market cap or FDV of these assets, the more fees they're making. Given the same number of tokens changing hands. So, basically everybody who's early in the system and sort of high in this pyramid of token launches does have an incentive to have really high prices, high trading volumes. It's cynical, and it leads to misallocation of capital because it's a playbook that has worked for these insiders for 3 to 4 years. And where the capital misallocation comes is one on the retail side, because they're getting hyped and marketed these like really high valued, super hot things that really aren't that valuable. And they're trading them for a while and probably losing a little bit, maybe making a little bit here and there. Again, while insiders are making a lot of money on the spread from the private price to the public price. But there's also misallocation of capital to venture funds and to projects, venture funds that support these types of projects versus venture funds that are really focused on investing in things that will have long-term value and long-term revenue creation. So unfortunately, I do think based on what's been funded, since 2022, we're going to see a bunch of junk come to the market in the next 12 months. And, I'll be out there on Twitter telling you to the best of my ability what some of that junk is. And that overhang just has to go through. But I do think the markets are changing now, the early stage private markets, where you're seeing fewer of those junk deals getting funded. And so look out 2 to 4 years, and hopefully I'm optimistic we'll have healthier tokens in market. And I think the last point is, it's not just the venture market that impacts venture-backed projects that impact what goes out. Like Hyperliquid took no venture money, and so as you see more successful models without venture money, broader launches, including the actual users in airdrops, and then incentivizing them through productive uses of the token, buybacks, fee discounts, things like that. We're going to get a healthier ecosystem. It just takes time.
It feels like there's just low-hanging fruit you could do to make the token, like liquid token market, not such a total mess. One other, things like disclosing your market makers, and there's stuff like that you could do. The other thing I used to think about is, it felt to me like in 2023, 2024, one of the big issues with crypto VC was it was very hard to actually book like gains on your investment outside of a token launch, and this led to a lot of projects, in my view, launching tokens that didn't need tokens, and that ends up being bad for like the retail investors that are kind of buying these things often. And so if there was a more active M&A and IPO market, maybe there's other ways for institutional or private investors to realize gains. And so you don't need to, like, not everything needs to have a token that pumps a bunch, which maybe that was naive of me to say, because a more permissive M&A market might mean a more permissive view towards just other things, that crypto companies could do. And if the token makes money, they'll still launch it. But I don't know. Do you think that was short-sighted, or does that play a piece into it too? Is that if we see more IPOs, if we see more mergers and acquisitions, will some of the scams become less, prevalent?
Yeah. So you're always going to have scams in crypto. These are permissionless networks, or many of them are. We won't get into the L2 debate and levels of decentralization, but there's almost no question that having buyers of crypto equity is a net benefit. To your point, it stops the adverse selection of tokens just being issued because there's just no other way to realize value. And so the biggest reason a lot of this has been happening and equity not being valued is there were so many headwinds to equity only regulated crypto businesses under the last U.S. administration, under the U.K. laws that still exist. But some of these laws, so the U.S. is now passing, we're on the cusp of passing the Genius Act, like a stablecoin bill. They're working on a market structure bill. Hopefully that'll pass later this year. But bottom line is, as those things pass, you'll see, a surge of, call it, institutions and established businesses, enter the market. And not all of them have the capabilities internally built, so many of them will buy. And what often happens has happened in mobile, with Google and Facebook doing tons of acquisitions early on. The best companies are sort of the early, warning signal that this market is hot and heating up. So you've seen Stripe obviously acquire Bridge, now acquire Privy. You've seen Robinhood acquire 2 exchanges, Bitstamp plus a Canadian one. So you're seeing the absolute best fintechs in the world start to seriously expand, into blockchains and permissionless networks. Robinhood mainly still on the trading side, but I think you're going to start to see them working on tokenized assets and the actual form factor of what people are buying as well. And then Stripe, has moved from just building, better networks and money movements to purchasing Privy and looking at financial accounts now, and getting beyond just the pure movement of the money. So it's exciting. Those are a harbinger, I think, of much more M&A to come. And what that means is equity is valuable again. And so that's great because not everybody can invest in tokens, wants to invest in tokens. And when you have equity, the people who are the natural buyers have a, sort of a preference for revenue generating and profit generating companies. Of course, they're valuing real things. So that's great. And you've seen the public market activity recently, Circle going public. It is trading, it feels like, at a mimetic valuation to some extent, but it does show that there's a significant appetite in the public markets for exposure to really big crypto themes like stablecoins. And then beyond that, you have also, all these treasury vehicles. What I think is going to happen there is that you can only have so many Me Too copycats treasury vehicles, Bitcoin, Ethereum ones, and Solana ones. I do think you're going to see those companies start to use their treasuries as well for M&A, so they become more productive companies. So it's not going to be sufficient to just be a Solana treasury company and hold the asset. I'm going to have to use the asset, stake it, maybe purchase and run a validator, and then down the road, maybe even start to participate fundamentally in the app layer on top of the blockchains.
Yeah, I do. I do think that the best versions of these treasury companies will do that. To your point, where like Soul Strategies is maybe the first Solana one, and they say that we're like a Bitcoin miner. Like treat us like a Bitcoin mining stock, which
Yep.
if you squint a little bit, but I do think that they like genuinely are making real validator acquisitions, active in the validator space, which also means the governance space in Solana. But that's I don't want to get too much
and
into
then
that
the other
stuff.
one that you see and is like World Liberty Financial, where basically it sort of started out looking a little bit like a treasury company, just buying assets up. But now, with the issuance of their own stablecoin USD1, you can sort of start to see them branching out into real productive, useful products for end consumers versus just holding assets.
Yeah, it feels like you've read my show notes here, Mike, because you touched on many things I want to get into with the Circle IPO and World Liberty Financial and so forth. But first, we're almost half an hour into a Solana show. We haven't talked about Solana yet. I can hear the YouTube comments just screaming at me. So to alleviate that, I'm just gonna ask kind of how you feel as like an app focused investor, how you feel about the Solana app world right now. Like where are some of the more interesting shots on goal coming from, and if you have just any broader thoughts on kind of the network and the ecosystem as someone who's, I guess, invested in multiple life cycles of the Solana world at this point.
Yeah. So look, Solana is currently, the most used blockchain. It's, generating the highest level of, revenue and fees at the app layer. The cynic will say, hey, it's just a big casino and all that's happening is people, trading meme coins. The optimist would say, well, look, that is actually what people get to choose what they want to do on permissionless networks, and they're choosing to participate in this particular way. The optimist would say, hey, they're hardening the infrastructure, Jito, the networking layer, and the L1 itself. So I would say, I think I would have hoped by this point in the middle of 2025, June 2025, that Solana DeFi more was happening there. I think that's been probably the biggest disappointment for me, and for a number of folks. There's just not as much activity, and the products are not up to par. And I know there's a big concerted effort to improve a number of things around how Solana works in order to support, for example, better perpetual products on chain, right? Like that's the number one thing that people want to do in real volume on chain, in addition to trading memes, is they want to basically trade tokens on significant leverage. So the fact that Hyperliquid is just eaten market share, like the entirety of on-chain perps, is pretty remarkable. And it's not because nobody was trying on Solana, but the products just haven't worked. They've had all kinds of issues around market makers being able to quote tight spreads, people being able to cancel orders, get the price they want. So I think you're going to an area I am interested in and you see a lot of people talking about, of course, public on Twitter, is like, it's pretty clear that Solana's on-chain DeFi products need to improve. And so I think number one is figuring out perps. There are some products out there, Market Drift, Jupiter, and they're fine, but I would say nobody would say that they're exceptional right now. But I do think some of that has to do with the underlying infrastructure, the inability to run an effective CLOB-based business, for example, on chain. And so that I think has a likelihood of improving over the next 6 to 9 months. And a lot of really good entrepreneurs, founders looking at it. Money markets need to improve. We need more capital at work in DeFi. Camino's doing a great job, but we just need to grow the amount of capital that people are putting to work on Solana on chain. By the way, what will lead to that happening is more tokens that are useful on chain. So we do actually need useful apps and products. Things like Pump that generate a lot of revenue, having a token on Solana will be fantastic. Like there's no downside in my opinion and I have a very biased opinion, but for that token, it's something that we need, and people need exposure to the meme coin category, and that will lead to more capital coming on chain on Solana to trade that token, etc. And then another area that I'm continue to be excited about from a business and sort of fundamental like vision perspective is broadly DePIN. And there's so many of the best projects are on Solana, from Hive Mapper to Helium, to one of our, to IONET, to Dawn Internet. The challenge has been for a lot of these protocols is just to have token economics that will lead to people actually wanting to hold these tokens and or trade and buy into them in the public market. And that you're starting to see that as like Helium is starting to accrue some revenue, Hive Mapper starting to accrue some revenue. But I think as you get clearer separation between what value is going to the equity entities versus the token, we'll hopefully start to see the tokens, the DePIN tokens on Solana, track the increasing usage of the underlying products, which unfortunately they aren't so much today. And then just obviously stablecoin issuance has increased significantly this year on Solana. You've seen a number of businesses that are basically looking to the network now that it's much more stable, that it has low fees for money movement business and consumer money movement. I think you're going to see that explode over the next 6 to 12 months. But that's going to happen across every chain, by the way, not just Solana.
Sol lovers, grab your Ledger Flex Solana Edition now at the link in the show notes. The Ledger Flex Solana Edition is now accessible to anyone who holds Sol in their wallet. Any amount of Sol held on any wallet will do the trick. You'll also get a Magnet Folio, SBT, and $20 in Solana. This is your last chance to grab the custom Magnet Folio and Sol voucher, so don't miss out. As always, investments in blockchain technology involve risk. Terms and conditions apply. Do your own research. Would plus one on the stablecoin piece, and much of that as well. I want to zoom in on the DeFi piece and maybe Hyperliquid specifically, because I think it is an interesting quandary that I'm sure like the Solana Foundation is thinking about. If you look at just perp volumes in crypto, it's like a matter of 10x between the biggest Solana perps exchange, which is Jupiter, and Hyperliquid. And Jupiter is not primarily a perps exchange, right? Like I'm sure they have dedicated engineers working on that product, but their big thing is DEX aggregation and Drift, which is maybe the biggest notable Solana perps exchange, is smaller than Jupiter by a couple X. I forget how much smaller at this point. So it's a concern that I think a lot of that like Solana investors, probably the foundation is thinking about. I guess, is there a trap here where Solana says, okay, like Hyperliquid's eating our lunch in perps, we need to build a better Hyperliquid? And I ask you this because this has been kind of a thing that's happened with Pump Fun, where project after project, Tron at one point, Base at one point, and just lots of different Solana teams have basically said, hey, Pump Fun exists. There's certain shortcomings about how liquidity works on Pump Fun, or there's this or that thing I don't like about it. And so I'm going to launch my competitor and it's better. So people are going to move to it. And it just turns that it turns out that, maybe the first mover advantage is really big. It's hard to peel that mind share away and just build a better Pump Fun. And so in my view, like the next Pump Fun is going to be a new iteration of what Dan Smith calls the game, right? Like that game in crypto of speculation, it's going to look a little different. So do you think that, I don't know, I guess,
I think they're different markets. I mean, to summarize, I think you can't really draw analogies between Pump and Hyperliquid. in terms of defensibility. They have different moats. Like Pump's moats are much more around like they are the standard token issuer with a significant amount of liquidity right after launch. There's a pretty significant social component. Their mobile app is getting better and better and a lot more volume than it had just 3 months ago as people start to use chat and other functions. So their moat is different. I don't think it's a trap for Solana builders to say, hey, we need to build at least what in their minds would be a better Hyperliquid. Like the fact is that there are many, many venues for trading of perps. It's clear that historically leadership in perps hasn't been particularly defensible. I mean, you remember DYDX and the centralized venues also offer these products, and they're standard products, right? So, exchanges are phenomenal businesses. There are many of them. And even if one is super, super dominant, you can create really, really, really big businesses by being number 2, number 3, number 4. Binance is massive, but so is Bybit. So is Coinbase, Kraken, and on and on and on. OKX. I do believe that, you have to assume that on-chain perps market are going to 10 to 100x. It just grows significantly. And therefore, even if Hyperliquid continues to be the largest, it would definitely be a phenomenal business if you can be number 2, 3, 4, and 5 and maintain that over time. And I would just say that there's a tremendous amount of capital. I want there to be more, as I said earlier, but there's a lot of capital, a lot of apps, a lot of folks who are on Solana and will trade perps there and want to have composability with the other things that they're doing on chain. Hey, it's really easy to borrow some money over here. Okay, then put it to work on perps over here. And I think there will absolutely be a large perps product, at least one, probably more than one, built on Solana. It doesn't have to beat Hyperliquid to be successful. And I think that's where you could fall into a trap and really turn people off. But I think that, again, meme coins are a little bit different in that Pump is like it's the biggest token issuer, by far. Or sorry, it's not. Sorry, the users who use the protocol issue more tokens than anywhere else. That's pretty unique. And then there's a social layer and a liquidity layer around it that I think is pretty defensible. What's interesting is I would put, though, something like virtuals, for example, in a broadly similar category. And virtuals, AI-based tokens, but many of them are frankly just meme coins. And that ecosystem, again, nowhere near as large as Pump, but it's large. And the token trades, I think it's on base, and it trades at a pretty healthy valuation. So even in a market that Pump dominates, there's room for other, companies and companies in adjacent areas to be really, really large. Bottom line for Solana is like perps need to work. There needs to be a venue to trade perps. That's where all the sizes. That's where such a large amount of the profits are. Just wildly more profitable than spot. For exchanges. Both centralized and decentralized. And you see it with Hyperliquid, just how much money they're printing. So Solana's got to figure that out. By the way, I should clarify, Solana doesn't need to figure it out, right? The ecosystem needs to figure out how do we get a product to market that works. And, hey, we probably need to start at the L1, then we need to work, at the client level. And there's just a lot of engineering that needs to happen. You work on how transactions get priority in certain blocks such that an on-chain perps product will work. I can tell you, and I think this, there are a significant number of folks working on this problem right now. I think it took some of the leaders of Solana a bit of time to really figure out how important this was and how fast the shift to Hyperliquid was happening, but they've figured it out now. Mm-hmm. They've figured out that it's an issue and putting all the resources towards it.
I want to ask a little bit about Pump Fun. Reportedly, from my reporting, there is a Pump Fun ICO being planned to raise, at the time that we were doing this, $1 billion at a $4 billion valuation. There's lots of rumors about just a broader airdrop and buybacks and all sorts of things like that. I think I'm just curious, you kind of said earlier, this is a good thing from a just adding capital into Solana DeFi perspective, but I'm curious to ask you your thoughts on the ICO route part of it. I think that was the most interesting piece because it's just not a path that many protocols have gone down, where I think typically we've just seen, do a point system, track your power users, hopefully eliminate all the Sybils, and then airdrop to the community, and then give some to the investors and some to the team. The hey, we're going to try to go raise $1 billion opens up a lot of interesting pathways for Pump, which is just something I'm interested in. Is like, could they do M&A? Could they try to, you know, add other wings to the business and stuff? But what's kind of your take on just the ICO aspect of this all?
Yeah, so I think, like, look, Jupiter, when they did their sale, they put some Jupe into a pool and they took USDC out on the other side. They raised money, right? And hundreds of millions of dollars. And it makes a lot of sense to me that companies that are building real enduring, again, companies and protocols and want to be among the biggest companies in the world need a significant amount of capital to do that once they found product market fit and are trying to scale to hundreds of millions of people versus just kind of your crypto native tiny like test and iterate audience. So that's where Pump is. They're at the point where I would argue they've probably saturated sort of the meme coin market amongst existing users, and now the question is, how do we grow the pie and assume that we're going to take a larger share, the largest share of that growing pie? Well, you're going to need capital to do that. So you're starting to see the strategies that they're pursuing, right? And a mobile app that's improving day in and day out, that now has really powerful chat features, like early signal token trading features, and just is eating and will continue to eat really quickly a lot of the activity that's happening in Telegram and elsewhere. So they're building a social product, and they don't think of themselves as a crypto product per se, right? It's kind of like social, but with money speculation involved, which is like what people are doing day in and day out, whether it's in gaming, whether it's in pure casino, whether it's sports betting and watching sports, consuming the content while I'm spending money on the game at FanDuel. There's just a lot of that behavior, and it's commingled and intermingled. So in order to do this successfully and go beyond crypto, you obviously need to bring in creators. You need to pay some of those creators. So you need significant capital to sort of draw in and expand that top of funnel that how to monetize very well with fees at the bottom of funnel. So it wouldn't be surprising or shocking to hear that, for example, centralized exchanges have billions and billions and billions of dollars on their balance sheet. And they have that for a whole host of reasons: customer acquisition, rewards and retention once they're on the platform, but also profits as well. Obviously, Pump isn't at the harvesting profits phase. They're at the grow the business phase. I applaud them for selling for what I understand to be the plans to sell some portion of the tokens to the public, to do it on the same terms that they're doing private deals. Like, to me, that's very and that's very forward looking. And you see Echo, a number of other platforms, touting Legion, that they do that as well. And Pump's going to do that directly. So I think that's great. I can't comment on an airdrop, but I can say that these are really, really savvy founders. And you can imagine that they're going to reward their users and the people who've been loyal and active with them, and have helped them get to where they are as a business that now I think can grow out into the mainstream, and they believe can grow into the mainstream. So there's going to be a mix of ways that the token gets out there to people who care. And then I think there's a realization now, as we discussed earlier, that there needs to be a value accrual mechanism. You can't just put a token out there for governance and this and that. So I would imagine there's going to be some element of putting revenue to work on behalf of token holders. So I won't get too specific about that. And that there's also going to be some component of a token that rewards folks who use the platform. You see Binance with their token do that. You see other exchanges do that with their tokens as well. So that basically opens them up to where their customers are now able to participate in the economics of the network and also benefit from using the product by holding the token. And to me, that's a win-win. And frankly, it's hard for kind of like Web 2 companies, social companies, to compete with that.
Yeah, well, I understand there's only so much you can say, so I'm excited to have more of a conversation with you down the line when we can kind of look back on this thing and maybe piece apart how it all went. But yeah, definitely an interesting story that we'll be watching here at Lightspeed as it goes off. I want to ask about the IPO market, Mike. Circle IPO, as you mentioned, was a blockbuster IPO. Like, I think almost very few predicted how successful it would be, how resonant that exposure to stablecoins narrative would be. I think it dovetailed really nicely with legislation in a way that was helpful for people. Now that we're past the Circle IPO, where do things stand for you? Is there an IPO window that's going to be? We're going to see lots of people kind of try to go this route. Is it going to get too frothy? Where do things stand?
Well, so there's definitely an open IPO window now. I mean, I think Circle told you that like immediately, right? I think it's trading at what, 6x or something. Its initial offering price, maybe 5x. Blew me away. I didn't know it would trade that well or expect that it would trade that well. It's exciting. And frankly, I don't think it will be trading there, 18 months from now. I think it'll be lower. But I think over a very long-term horizon, that they can create more value. And I think being in the public markets with a brand like the brand that Circle and USDC have will open up just a tremendous number of avenues for growth for them. But their economics today are not fantastic. They share 50% of their revenue from interest with Coinbase. I believe if the volume's on Coinbase, they get even less. So they have some headwinds there, but they have the tailwinds of massively increasing stablecoin usage, a full ecosystem that's utilizing, particularly in the West, USDC, and so I think things look positive for them. What you're seeing is the other good businesses in crypto are talking about going public. Coinbase, Gemini, Kraken. So I think you're going to see a strong next set of companies go out, and that'll be exciting. And I think those, if they get out soon, should trade with strength. And I think it's good for everybody. And then you're going to see some weird stuff like that Tron announcement yesterday, like a TRX treasury vehicle. I mean, Tron, candidly, generates a lot of revenue from fees. I mean, that token does actually have some value. It'll be interesting to see, how that thing trades, if it trades like a meme or like a real thing. But anyway, the IPO window is open. I'm really interested to see if companies like Falcon X, Anchorage, some of the big guys who are private have, been around for 6, 7, 8 years, go public. I hope they do. I think it'd be fantastic if the public markets, if the world had more, transparent view into how really fantastic the economics of some of these businesses are.
Yeah, and it almost feels, so there's like fewer IPOs today, just in general as well. A lot of very highly valued companies are just choosing to stay private because it's hugely expensive to do an IPO, and it may just not be worth it for a lot of these companies. But in crypto, it seems like there's like maybe regulatory reasons you would want to do it. There's the kind of the clout of being, if I'm Circle, I'm the one that got, publicly listed first. So I wonder if crypto is going to.
It also brings liquidity, as an acquiring currency, and also gives you a lot of flexibility about how you can raise more money. Like if I'm Circle, I'm probably, right now it's on such a rocket ship. I probably wouldn't issue shares, but at some point they've got to be thinking about selling more shares at a high price. So we'll see when that happens.
Mm-hmm. And does crypto become like the leading industry for IPOs, just based on other trends of decreasing IPOs in some sectors?
Very, very possible, just in the sense to what you said earlier, that there is an incentive, that there's some sort of like an endorsement and sort of a blessing. And I think it's been the goal, legitimization for so many of these companies for so long. But obviously, and that's a very different market than where I think the majority of value will continue to accrue in crypto, which is on chain. The assets themselves, Bitcoin as a store of value, digital gold, Ethereum, I think they're saying digital oil now. And then Solana, just an absolute monster revenue machine at the L1. And we'll see if that continues, but there's a really powerful app layer on top of it. So those assets, I do believe, will continue to be much larger in size and aggregate than the public companies.
Mm-hmm. All right, Mike, let's talk Trump. Throughout the Trump presidency so far, my understanding of talking to people that are in the industry is basically, some of the things he's doing are grifty and distasteful, and I don't love them in the crypto world, but the good outweighs the bad. The juice is worth the squeeze, whatever analogy you want to use. it seems like lately things are getting more and more entangled with him. Part of the Tron IPO news was that I believe Eric Trump is going to be an advisor to the company. Eric Trump came out and denied that, but there is clearly some kind of mutual affection between Justin Sun and the Trump crypto empire, which people who work in crypto don't have a lot of love for Justin Sun typically. And we're seeing that this could meaningfully affect legislation, with Democrats arguing, I think, especially in the Clarity Act, this market structure legislation, that there needs to be like a politicians can't have a personal financial upside in crypto type thing, and that could be a non-starter for Republicans who don't want to be seen as scolding Trump or something like this. So with I don't know, what's your take on all of this? Is Trump going too far to where it's becoming bad for crypto with all his personal involvement?
Yeah. So where I'll start is to say that I think the reason many folks supported Trump, many folks in the crypto industry supported Trump and the last election cycle is, the last administration literally wanted to kill the industry in America. It's not debatable like that the industry is better off with Trump in office. The SEC is no longer, conducting willy-nilly lawsuits against legitimate companies. The CFTC and other regulatory bodies are now, working on rulemaking. You see laws in Congress to actually put some guardrails around different crypto products, from stablecoins to exchanges, such that companies can operate and protocols can operate within some reasonable set of guidelines in the U.S. versus just constantly fighting lawsuits, civil and criminal, that many of which were dropped after Trump was elected. Now, so that's, so there's a lot of positivity, and you see it, basically in all the regulatory agencies. You see it with, David Sachs as AI and crypto czar. And so there's a lot of positive momentum. Look, it's also positive the Trump family is actually using, the blockchains. So that starts out as a positive, right? They've, issued NFTs, they've issued coins, meme coins. They have invested in mining companies. So they're participating in a number of different ways. I think where it's starting to get a little problematic is even World Liberty Financial, participating and saying, "Hey, this is a gateway to DeFi," is interesting. Where it starts to get more problematic is when it looks as if there is an increasing, let's say, called a pay-to-play trend that's developing, where, for example, it seems like certain people are now starting to donate or have been giving money, quote unquote, investing in Trump and Trump associated projects, and then you see some period of time later that specific investigations or things that were dropped, and then not too much later, you see, they're actually going into business with that particular, those individuals. Like, it's pretty clear that that's too far. And so, that's common sense. Like, it's just, if you're defending that and you're not like part of the Trump family that's being directly enriched by it, come on, take a look in the mirror. So, I think we're trying to create a better industry here. And so we have to try to push back against the excesses of, insidery grift. And, I don't think that the most powerful person and family in the world, I think they should kind of like be a beacon to sort of guide us on how to use these things. I think that's where it started. And so I am hopeful. I'm hopeful that one, that they deliver on the products that they're bringing to market, right? That World Liberty Financial actually does make a really good effort, that their USD1 stablecoin is a really high quality one, and that it works, and it's integrated in a bunch of different places. That they release an app from World Liberty Financial that's actually useful to the average consumer, that brings more people on chain. So I think the jury's still out on that. I think some of that might be trending in the right direction, but unfortunately, for the past year, most of what we've seen is these kind of like pay to play seeming things. Lots of announcements about more announcements, lots of money going to the Trump family, and maybe not as much product development as one would hope for. So that's got to change, or it's going to reflect horribly on our industry.
Yeah. And, Trump the Trump family and Trump himself has direct financial upside in World Liberty Financial. Actually, like really significant financial upside. If I forget what the terms are, but it's something like 70% of equity or
Yeah, it
70% of
might even be
the
80.
fees from the tokens. And same with the Trump meme coin. A lot of that supply goes to the Trump affiliated
And they
LLC
don't have a history of like understanding, when they've gone too far either, right? Like launching Melania right after launching, the Trump meme coin. It was just too far and it killed, the value of both. And it was unnecessary, unforced error. I mean, that pattern goes as far back as the real estate days. So I would just hope that they've learned from some of those previous errors. And again, maybe slow the pace down and just focus on, one thing in each area and actually making them successful. I'd love to see that and fewer headlines and PR announcements.
Mike, it's been a really fun kind of wide ranging conversation. Good to just get a lot of your take on the, never dull crypto world. And so thank you for coming on the pod.
Absolutely. Appreciate the time. Thanks so much.
Thank you all for listening. If you made it this far, please 5-star wherever you get your podcasts. If you enjoyed this show, please share it with a friend. Come to Permissionless. We're doing a live Lightspeed there. Would love to get to meet a lot of you. There will also be a happy hour where we can hang out, chat over a beer. We will see you all again very soon.